Good morning, everyone. Today is June 11th, 2026. We're around 6 o'clock in the morning, CEST, looking at the EURUSD chart, 1 minute. Today, I think we are facing a bearish day with a bullish setup. In the afternoon, we're having an ECB rate decision, so that could influence volatility a bit. I must say, today I've drawn two channels on the chart. So the bearish channel and the bullish channel, here you can see it. And I've kind of marked this point where we might have a conflict, or not really a conflict, but more of a decision point where we have to make a decision, or a price line needs to make a decision, which a geometric shape or which geometric channel will it follow? Will it follow the bullish or the bearish channel? Okay, so right now we're kind of approaching the bottom of the bullish channel, which I think is actually a very good entry position for our setup. So what I believe will happen today is that we will now hit the bottom of this bullish channel. Price will then be taken up, probably somewhere around the top of our daily range or even above. Today I also again drew in the red circles. I don't want to rely too strongly on the red circles. However, most of the time they do mark points of potential change in the market. So that's why today I've decided to mark them in. And our decision point is right between these two circles. So I think these circle rims are points to watch. And I even think that we're gonna maybe even see some aggressive price action, bullish price action initially at the beginning of the day, to then have, well, maybe not a strong reversal, but a very clear reversal to the downside, then moving back into this bearish geometrical structure, and then pushing price further down. And then I think we might see levels even below the lower bound of our daily range, so even below 115.2. Let's see what happens today. I'll be back with you guys later in the day, as always. Good. Okay, so I guess we were expecting price to hit the bottom of this channel already at this point. It apparently didn't. Was then looking for the 1x bearish line. The 2x bearish line was then pushed down. And here I was really convinced that cool, we've reached the bottom of our channel. Then we can try a long trade right there. That one we tried, got burned. Yeah. So this is where we then made the decision to actually extend this channel by half this size. Okay. And from there, we were actually expecting that price should then move to the bottom of this channel. And we were diligently waiting for that moment. And this was also the rationale behind not taking this trade. So this trade neither hit this center of our daily range nor the bottom of this channel. So as price gradually moved up here, we didn't take action. At this point, this we defined as our crossroads, so to say. So this was the supposed bullish channel, and this was the supposed, or this was the bearish channel. But since we already broke this channel here, we had to extend it, meaning that this decision point would then actually be transferred here, because this one, the lower bound of this channel, had actually dropped to this point. So, and the rationale behind, well, because you could have argued, well, why didn't you take a short trade here then at this point? And that's actually a good question. I guess we could have. So, and the rationale behind that decision not to do it was actually that we had the 2x line here coming down from a higher up inflection point. And since we had a bit of distance, I was thinking, well, maybe it's going to be a bit of a pullback. But then price, sure enough, will be looking to test this slope going down before then making the final decision to go bearish. And as this happened, we were actually convinced, well, it's going to probably just drop to the bottom of this channel right here. And from then on, before our decision point even, it's going to probably make the choice to go bullish. Okay. That obviously didn't happen a first time, and it dropped onto this line, and I thought, well, that could be like an emotional, small emotional dip. So we bought that one, and when that one broke, I actually made an emotional move. This wasn't a rational position to take. When hitting this line, I mean, here we were hitting also not just the bottom of this channel, but also the center of our daily range. So I had very strong belief that this was going to be a bullish move, which it then obviously wasn't. And I was still believing that here, okay? So, but I didn't have a rational mind at this point, so I was taking a position here. And a more rational point would have been this inflection line right here. But even then, I mean, at that point, I would have probably lost the belief of, say, we're still bullish, right? Since we had so much bearish price action already up to this point. So leaving out this position would have been better. I mean, it was a very small position, so it doesn't badly sting, but it's unnecessary. So I chickened out of this one. I didn't let it hit my stop. I was very aware that I was taking a bad decision, and I decided to step out of that decision. Okay, so price then bounced a bit off of this inflection line, then was brought down again by the 1x channel line right here, was dropping. We didn't quite hit this line again, and then we had a reversal, which was also surprising. And this is when I realized, okay, well, we're going to have probably a very good shot at going short at the top of this bearish channel. Since we had already passed way beyond our decision point here, so for me, it was rather clear that we were going to go in a bearish direction. Okay, so price moved up sharply at this point, and as soon as it hit the top of this channel along with the center of our daily range, I thought, well, okay, this is my chance. I think I wasn't at my trading console, but I had like a warning, like an alarm set to this particular price. It got triggered. I pulled out my phone and I actually took a position. And a few minutes later, I actually was back at my trading console, and I was looking at this motion and thinking, well, okay, that was probably the right decision to take. A good opportunity. And then price moved down really, really sharply. I think there was some interest rate decision today, which could have caused this additional volatility. And as soon as we hit this line, I should have actually been in damage control mode, since we had already lost a few positions in the morning, and just say, okay, well, I'm just going to take it. I'm going to do damage control. At this point, we were at a very small plus. I think it was about like not even 0.5%. But still, I should have been probably more defensive. I wasn't. I was more like the oink oink, piggy piggy, yeah, wanted more. And also because, this was really brute force volatility. So I was well aware that I was being a piggy, and I thought it actually was a bit justified. I mean, you gotta give me this one. This was a justifiable piggy piggy moment. But yeah, got punished for sure. Thought it would be a clever idea to take another position, very small position, just some reassurance. I think I even of this position, I pulled down my stop. So this was actually like this turned out neutral. I didn't make any losses on this one, but this one then actually got stopped out. Like I said, with a very small loss, and also with a very tight stop. That stop got triggered. And that's the point where I decided, okay, I just gotta leave, clear my head, and do some other chores. So I left the trading console, and sure enough, price did continue bearishly, though. I mean, this is not normal motion, right? So this is whipsaw, obviously. Really pushing hard, like bullish especially, very strong bullish motion, pushing really hard. And this was also my conviction in the morning. So going back, when we had this strange move up that was really, really strong, I was really reinforced in my belief that we're going to go in a bullish direction. Okay, and that was the rationale behind taking this trade. Yeah? For me, this was a very clear-cut, situation. We're going to go up, for sure. Okay, well, the rest is history. I kind of took you through it, and we were going to go bearish. And then, of course, surprise, surprise, we did get our bullish motion, just slightly delayed. Right, and as you can see, of course, interesting, yeah, for us, especially since we have this nice geometric overlay, we can really see this didn't quite hit. It didn't hit it neither hit the inflection point, nor did it hit the bottom of this channel, which I think isn't nice. But you could argue, well, this line going up. So from this inflection point below, you can see price interacting with this line, kind of trying to break or push through, kind of, pulling the rubber band or the rubber string, if you will, building up tension, and then the surefire to the direction that we had expected in the morning, right? How do you time this? Well, this is one of the things and one of the questions we ask ourselves, well, not every day, because we don't have the luxury of doing our research every day. But this is what we're trying to do our research for. So we're trying to look for these, squeezes, these moments that happen, these tensions that build up in the market, so that we can actually get a feeling or get a sense of when these things happen. So we have this bullish feeling here, and we get all these signals from the market saying we're going long today, we're going bullish. Okay, price action showing or telling us a completely different story. We're always looking and trying to find or research methods, mathematical methods to actually get behind this and to really get a feel, okay, something's off. Then we get this whipsaw motion. We still see something's off. And how can we kind of determine this is the point, not just price-wise, but also time-wise, where we have to actually step in and cash in the long trade that we had actually anticipated in the morning. No? These are still open questions. We cannot do this at this point. Probably this rectangular shape will be kind of the guide or the end point for price action, I suppose. I don't know exactly what will happen, but we're approaching 9:30 in the evening. So I think price action is kind of drying up right now. And I think this is kind of, end of the line. But it's always great to have this geometric overlay so that you can see, okay, what are the motion bounds of price time. This is what we do. If you don't know how we look at the markets or how we do things, make sure to check out our introductional video. We have it on our channel. so that you kind of get an idea of the kind of mindset we start from when looking at the markets. My point being, even if you have a geometric overlay of the market and you have a general sense of the bounds in which price action takes place, taking an informed decision still is a big challenge, and still a lot of trades go south. Okay, so, and this is kind of the key takeaway, and also the challenge for us. Now that we have all this geometrical information, how do we become profitable in the markets? So if you're watching this and you have this great idea, make sure to leave a comment for us. If you can help us, then try to help us. If you have a tip for me, maybe to improve as a trader, making better or more informed decisions, any tip is welcome. We're happy to learn, and especially have the debate, because our methods, and we're fully aware of this, our methods are a bit unorthodox, and we know that our way of looking at the market is not the way that everybody does. But I guess there is probably some, how do you say, common truth, or some ground truth to, or some ground laws to trading, that maybe I'm not applying here, that you know very well, or much better than myself. And I'm always happy to hear and have the discussion. We also have to keep in mind, these charts that I'm showing you are 1 minute EURUSD charts. So this is, apart from tick charts, this is almost the highest resolution you get. Okay, and this geometric overlay is really fantastic. If you think about it, that even on such high resolution charts, we're still getting such strong geometrical responses from the market. Good examples are these lines, and you can really see prices nicely dancing around those lines. Yeah, this is not a coincidence. It's not a coincidence that this level holds, then it moves to this line, this level is broken, holds on this line, then retests this one. These lines are not drawn in from price action, so I don't look at previous price action and then draw in these lines. Again, these lines are all calculated. Yeah. Make sure to watch our intro video. Thank you so much for sticking to the end. I hope you liked it. Leave a comment, like, subscribe, and I hope to see you on the next analysis. Take care. Bye.